Tuesday, April 18th, 2023, Monaco 64, home of alternative economics and contrarian views. We're going to look at the only way that banks will be safe, and they're nowhere near being safe, and the banking system is still a confidence trick. And until what I tell you later happens, yes, your supposed money in the bank will never be safe. Of course, I'm not trying to tell you to take your funds out of the bank. That's up to you. Hopefully, I'll show you how fragile the system is. And it's not me saying this. It's been said by people who actually founded central banks. And that's what we're going to do today. First, we're going to look at some quotes and some ideas as well from some former central bankers in modern day. And yes, Rudy is on the sofa. Hopefully he'll behave and stay there. So I'm going to start with a quote from one of the founders of the Bank of England. Bank of England, of course, was founded in 1694. And Sir William Patterson was a Scottish trader and banker. He was one of the founders of the Bank of England and was one of the main proponents of the catastrophic Darien scheme. Later, he became an advocate of union with England. He was Scottish, of course, but this is what he said. The bank hath benefit of interest on all monies which it creates out of nothing. Yes, and by the bank, he means the Bank of England. So we're going to go to another quote here by a former director of the Bank of England, Josiah Stamp, 1st Baron Stamp. He was born in 1880, died in 1941. And this is what he said. Banking was conceived in iniquity and was born in sin. The bankers own the earth. Take it away from them, but leave them the power to create money. And with the flick of the pen, they will create enough deposits to buy it back again. However, take away from them the power to create money, and all the great fortunes like mine will disappear. And they ought to disappear, for this would be a happier and better world to live in. But if you wish to remain the slaves of bankers and pay the cost of your own slavery, let them continue to create money. So apparently he said that during an informal talk at the University of Texas in the 1920s. Another comment, this is more an extract of a book by Captain A.H.M. Ramsey, The Nameless War. He was one of the MPs that was imprisoned by Winston Churchill all throughout World War II. And this is what he said. And this is about the parasitical nature of fractional reserve banking. And you've probably heard of fractional reserve banking, but this will explain it very succinctly what it is. And he's talking here as well about the creation of the Bank of England. He says, gold was soon to become the basis of loans, 10 times the size of the amount deposited. In other words, £100 in gold would be legal security for £1,000 of loan. At 3%, therefore, £100 in gold could earn £30 interest annually with no more trouble to the lender than the keeping of a few ledger entries. The owner of £100 of land, however, still must work every hour of daylight in order to make perhaps 4%. The end of the process must only be a matter of time. The moneylenders become millionaires, well, in this case, billionaires or even trillionaires. Those who own and work the land, the Englishman and the Scotsman, must be ruined. The process has continued inexorably till now. When it is nearly completed, it has been hypocritically camouflaged by clever propaganda as helping the poor by mulching the rich. It has been in reality nothing of the kind. It has been the deliberate ruination of the landed classes, the leaders among the Gentiles, and the supplanting by financiers and their hangers on, well, the bankers, I guess. So that's another interesting quote there. Another book I'm going to recommend to you so you can really realize what money is, and that's why honest weights and measures are so important, is this one here. What Has Government Done to Our Money by Murray Rothbard. The case for 100% gold dollar. He goes through the whole, they call it the regression theorem analysis of money, that money is basically the most marketable commodity, and it's a real commodity. It could be a conch, it could be a stone, it could be cigarettes, and it can be precious metals, gold and silver, and they have been money for thousands of years. So it's not what's in the bank right now, the credit entry that you have, the funds that you lend to the bank, and it's another reason why they're trying to move away, or they have moved a society away more and more from commodity money. Our great grandparents and before them, they used to use gold and silver as money, and because they are the most marketable commodity. But with crises like World War I, the Great Depression, World War II, they've taken us more and more away from gold and silver. We basically don't deal in money anymore. As John Exter, who worked for the Fed, said, we deal in IOU nothings, and we've come to a stage where there's so much debt, because that's all it is now. It's debt backed by government debt, that that they have to find a way to keep us in the system. And I think CBDC is one of them, because you won't be able to at least go into empty paper promises, which is what cash really is. But it's still, people still feel like they've got something there. But ideally, we should go back, of course, to real money, and that's why you should read this. The other book I wanted to reference is by Mervyn King, who was the governor of the Bank of England from 2003 to 2013. It's Mervyn King, The End of Alchemy, Money, Banking, and the Future of the Global Economy. There you go. And here on page 261, he talks about more radical reforms. And he says, even though the degree of alchemy of the banking system was much less 50 or more years ago than it is today, it is interesting that many of the most distinguished economists of the first half of the 20th century believe in forcing banks to hold sufficient liquid assets as reserves to back 100% of their deposits. They recommended ending the system of fractional reserve banking, under which banks create deposits out of thin air to finance risky lending and so have insufficient safe cash reserves to back their deposits. The elimination of fractional reserve banking was a proposal put forward in 1933 as the Chicago Plan. The only thing I don't agree with this plan is that they talk about having government securities as reserves. Well, the only really true monetary security, I think, would be commodity money, gold and silver. But at least it's 100% banking. And of course, he gives an alternative, because people will ask, how our business is going to be financing. And he says, well, you have an investment banking sector, which helps startups or whatever, private companies, issue equity. So that's how he gets around it. Yes, I wanted to go to the Proverbs 16:11. A just weight and balance are the Lord's. All weights of the bag are his work. So, and this website here, Helping Up Mission, they talk about this. It says, honest weights and balances belong to the Lord. And it says, this verse about scales and weights, it's a reference to ancient method of measuring bulk items. But the message here is not about weights and measures. Instead, it's about how we deal with others, even though they're not mentioned at all. But the Lord is mentioned along with his clear intention to be involved in the entire process of our dealings with others. God is all about honest scales and balances, and he really pays attention to all weights in the bag. Yeah, it says when you're honest in our dealings with each other, we're living as the Lord desires. And inflation, of course, is not honest weights and measures. Inflation is not caused by higher prices. Inflation is caused by this fractional reserve banking system that we have. It's caused by the central banks. As you saw, central banks are able to create money out of thin air. And how do they back that money? Well, through taxation, through the national debt. So it's all interrelated. So if we really want to go back to a safe banking system, and banks are basically a place where you can store, if you're fortunate enough to come into produce and come into quite a lot of money, and you want to keep it safe. The banker's supposed to keep it safe for you at a cost. Of course, they're going to have to run a business. So yes, it's called 100% deposit banking, and yeah, until we go back to that kind of banking, things will never be safe. Your supposed money in the bank won't be safe. And we're hearing, of course, there's a story here in the FT I saw the other day, and I thought, yes, he's right about that. Deposit insurance is key to the confidence trick of banking. So this is from the FT, so from someone called Patrick Jenkins. Yes, so as I was saying before, we need to get rid of central banks. We need to get rid of dishonest weights and measures, because that's what fractional reserve banking is. I'll give you an analogy. If you go to a restaurant in the winter or when it's cold and you leave your coat in the cloakroom and they give you a ticket, you expect to go back with that ticket and get your coat. And that's what banknotes or dollar bills are all about. It's just a token saying that you left your gold here, you left your money here, you come back, it's still here. Yes, there might be people who want to invest that money, and they can put that with an investment bank and risk it. But for us, it should just be a deposit bank. And that's what I'm trying to say here. So back to this article, it says reforms to guarantee schemes in UK and US are essential to avoid a deeper crisis. And this guy says here, confidence is essential for the modern form. It's not a modern form. It's been going on since the 17th century with the Bank of England and central banking of fractional reserve banking, which allows a bank to fuel economic growth. No, it's not fueling economic growth. It's fueling fraud, dishonesty, and massive booms and busts by lending out for long periods far more than it keeps on hand in easy access deposits. So if fractional reserve banking was fueling growth, how come our economies have been growing for less than 3% a year for the last 20 years or so? That's all I have to say about that. The other thing that looks interesting here, and how they want to, like the BIS, which is the bank for the central bankers, they want to come in and snoop in the US banking system. Right now, they're only involved with the too big to fails in the US. This article, though, here says global regulators consider wider net to catch smaller US banks. So watch out, smaller U.S. banks. The central bankers are coming after you. The demise of Silicon Valley Bank and Signature fuels concerns that existing focus on largest lenders is outdated. So I'm going to stop at that. Hopefully you got what I'm trying to say here, that there's nothing really in the banks. Banks don't keep any more money, i.e. real commodity money. It's just a Ponzi scheme of borrowing and lending. And I think even if they guarantee, quadrillions of deposits, that currency that you think is worth something is going to become worth less and less. Yes, they're going to try to keep you in this system. Someone noted to me on Twitter that NatWest, which is the bank that I use, they've decreased the amount of cash you can take from them, like going to the bank, to the branch and taking cash out. They decreased it from 5,000 to 3,000. So they're putting a lot of limits because this system is coming to its final ruination, I would say, and they want to keep you in it. So you might ask, I need to keep funds in the bank to run my business or to pay bills. Yes, and I understand that, and I do too. I've got funds in the bank for taxes, for expenses, and but it doesn't mean to say that you have to keep all your hard-earned savings in the bank. So what's the best way not to be in this system? Well, I think it's just to, right now you can still exchange this fiat currency Ponzi into real money, i.e. gold and silver. It's still affordable. I mean, there will be one day when, like in Zimbabwe or Venezuela, the local currency will not be accepted for gold and silver. So while you still can, I would personally keep stacking. This is what I've been doing for well over 20 years now. It's not advice, but hopefully you do a little more digging into the system. You maybe read a few books. There's many books out there that I'm gonna recommend in the future as well, and I've done in the past, and make your own decision. So there you go. With that, let's quickly look at where the markets are then this morning. It's 8:31 a.m. London time. We've got spot gold at 2002. It's up about $7. High's been 03, low's been 93. Silver is up 0.5% at 25.15. Low has been 24.97. High has been 25.17. To the stock market futures, the Dow futures up 25 points. NASDAQ is unchanged. S&P futures up 2 points. To the currencies, sterling is up 1/3%, 124.16. The euro is up 1/3 as well, 105.57. The dollar is unchanged versus the yen, 134.34. The dollar is unchanged versus the yuan at 688.30. Let's check out the Russian ruble. Well, the dollar is down 1% versus the ruble, trading at 81. We're trading 82 yesterday. Continuing with the currencies, we've got Aussie dollar up 0.5%, 67.31. The dollar is down 1/8% versus the Canadian dollar, 133.78. And the Kiwi dollar is up 0.4 at 62.04. To the commodities, we got platinum up $4 at 1,055. Well, we got WTI crude up 0.2 at 81.06. Brent crude is up 0.25%, 84.81. High grade copper is up 0.5% at 408.72. I noticed that Tavi Costa from Crescat Capital, he's been on this channel a few times. He's just noticed that agricultural commodities are taking off again. it doesn't bode well for prices of groceries or prices of food. So there you go. That's what's going on there in commodities. Let's just finish off with the bond market. The 10-year yield is at 360. It's up 1 basis point. The 2-year is at 419, unchanged. To the UK gilt or government bond market, the 2-year yield is up 9 basis points at 370. The 10-year is up 8 at 377. And the 30 years continue to move higher. We're at 412 now. It's up 8.5 basis points. With that, I'm going to wish you all a very good day. Take care. Bye.